Hello and welcome to the weekly market metrics. I'm your host Samdarsh and we are in week 6 of 2026. See, this was both a good and a bad week. Good in many ways as the uncertainty around tariffs got resolved, and bad because for traders, from what we know, it has not been easy at all. We are being very conservative when we say that. See, markets have indeed moved in a positive direction, but are still consolidating with no further directional progress. Anyways, let's check the charts and see how the price action played out for this week. We'll also look at what is possible in the upcoming week. A quick heads up before we start, this was a 6-day trading week and all the data covers Sunday, February 1st through Friday, February 6th. As always, let's start with Nifty. Coming to the Nifty's weekly time frame, for the week, Nifty gained around 446 points, up 1.77% from the last Friday's close. The weekly candle shows a long upper and a lower wick with a wide range of 1,769 points or a 7.2%, all within 6 trading sessions. The upper wick reflects a sharp gap-up opening following the US-India trade deal announcement and the subsequent sell-off from the first tick on Tuesday, while the lower wick marks the low made on budget day, which was on Sunday. The week's high, which is close to the all-time high of 26,350, acts as resistance. On the downside, 24,571, which is the budget day low, will act as a support on the weekly time frame. Coming to the daily time frame, now on the daily time frame, Nifty printed 4 green candles and 2 red candles in this 6-day trading week. The index fell around 650 points from the high made on Tuesday, 3rd February to close at 25,693. The support lies at 25,500 to 25,450 zone and resistance at 25,800. The 384 points gap between 25,108 and 25,492 is yet to be filled. Now, will Nifty come back to fill this gap or will it remain unfilled? Your guess is as good as mine. Tuesday's white candle made the price action very difficult to read and the chart looks all over the place with respect to price action. It is better to let the price action form over the next week before looking at it again. Now let's move to the hourly time frame of Nifty. On the 1-hour time frame, the price remained below the 50 EMA after crossing it briefly in the first hour of the budget day. After that, on Tuesday, with the mega gap up, the price jumped above the EMA and stayed above it till the end of the week. It was one of the most treacherous weeks for short-term trend followers, more so after a clean downtrending January month. Let's see if the price chops around the EMA or gives a clear directional move in the upcoming week. Now moving to Nifty's range till expiry. Nifty's 2 DTE ATM straddle premium closed at 207 this week, which is pricing in a 0.81 move on either side. Based on the current straddle pricing, the expected range till expiry of Nifty is, on the upside, 25,900 and 25,487 on the downside. Now moving on to open interest, for the upcoming Nifty weekly expiry on Tuesday, 10th February, 26,000 call and 25,500 put have seen the highest open interest as of Friday's close. The second highest open interest is at 25,800 call and 25,400 put. So, the 25,500 and the 25,800 levels are coming up here as well. Do watch out for these levels. Next up is SENSEX. Let's talk about the weekly time frame first. On the weekly time frame, Sensex gained 2% or 1,633 points to close at 83,580. The range for the week was 5,972 points or 7.47%. That's a seriously wide range for a single week. Support levels are seen at 80,400 and 79,900, which is the budget day low, while the next key resistance sits at about 85,800. Let's now move on to the daily time frame. On the daily time frame, similar to Nifty, Sensex printed 4 green and 2 red candles. The immediate resistance is in the 83,950 to 84,000 zone and above that at 85,800. Whereas support is at 82,800, then at 80,400 and 79,900, which is the budget day low. Let's talk about the range of SENSEX till expiry. See, the next weekly SENSEX expiry is on Thursday, 12th February 2026. With 4 days to expiry, the ATM straddle closed at 895 points. Now this implies an expiry range of, on the upside, 84,475 and on the downside, 82,685. This broadly places SENSEX in the 84,500 to 82,700 range going into expiry. Let's first look at Bank Nifty's weekly time frame. On the weekly time frame, Bank Nifty gained 578 points or 0.97% from last Friday's close and has given an all-time high weekly close this week. See, Bank Nifty made a high of 61,765 this week on Tuesday following the US-India trade deal announcement, but gave up 1,644 points or 2.66% from that high to close at 60,120. The range for the week was 3,982 points or 6.9%. Resistance is seen at 60,360 and then at a recent high of 61,765, while support is at 57,800. Let's move on to the daily time frame. See, on the daily time frame, supports are at 59,600, 58,250 and 57,800, whereas resistance is at 60,400 and 61,400. See, this price action is distorted, so it's better to observe next week's price action. Moving on to the hourly time frame. On the hourly time frame, similar to Nifty, Bank Nifty also briefly moved above the 50 EMA on budget day and then moved down, only to come back above it with a mega gap up on Tuesday and stay above it until the end of the week. A very painful week for short-term trend followers even in Bank Nifty. The short-term bias remains sideways to positive. Talking about market breadth, it seems to have flipped after the massive gap on 3rd of Feb because 72% of stocks in Nifty 50 and 52% stocks in Nifty 500 are above their 21-day EMA. The broader market continues to be weaker compared to the heavyweights. Moving to ROC, in week 6 of 2026, all 4 indices closed in the green. Year to date, only Bank Nifty is in the positive territory with a gain of 0.90%, while Nifty, Midcap Nifty and Sensex are down 1.67%, 0.96% and 1.92% respectively. Moving to sector performance for the week, Nifty Realty topped the charts with a gain of 5.34%, followed by Nifty Infra up 4.24% and Nifty Energy higher by 3.74%. Nifty Consumption and Nifty Auto rounded off the top 5, both gaining 2.88% for the week. Realty and Energy continues to feature consistently in the top performing sectors, and the rest 3 were new entrants this week. Let's now talk about range and expiries. Nifty's 5-day daily average range moved up to 355 points. The range did cool off on Thursday and Friday, but it is consistently staying above 200 points. Just like last week, Tuesday recorded the highest daily range across all 4 indices, which is Nifty, Bank Nifty, Midcap Nifty and Sensex. Just have a look at the weekly ranges. 1,769 for Nifty, 3,982 for Bank Nifty, 1,172 for Midcap Nifty and 5,972 for Sensex. Yes, this is a weekly range and not monthly. That's how this week was. Let's talk about Nifty's Tuesday weekly expiry. With a gap opening of almost 5% or 1,250 points and taking naked far OTM call sellers to the cleansers, Nifty's expiry turned out to be one of the most rewarding in recent times. It's after these massive moves that the opportunities presented are equally massive. After the first 5 minutes, the index remained within a 227 point or a 0.9% range, with the straddle premium at 312 points around 9:20 am. The OTMs offered some of the best premiums, but the real question was whether traders had the courage to short them after such a mega gap up. In hindsight, it may look like the best trade, but not everyone went in with full size. With inflated premiums, the risk widened significantly. Overall, it was a very rewarding expiry for intraday sellers. Now moving to Sensex's weekly expiry on Thursday. Apart from the first hour hiccup, the Sensex expiry was easier compared to the last few expiries. The index first went down 470 points and then moved up 288 points in the first hour. From there on, it turned into a good downtrending day with the index gaining 276 points in the last hour. The premiums were decent and it was a very good expiry overall. Both expiries this week were good. Moving on to the India VIX for the week. It cooled off post-budget as expected. For the week, it was down 21% to close at 11.94. Even the gap up on Tuesday did not push the VIX higher. Moving to commodities this week. What a week this has been for commodities yet again. Silver lost 9.4% this week, while gold gained 3%. Both are still above 40% and 12.5% away from their all-time highs respectively. The volatility in both these counters is through the roof. Silver is making 10 to 15% ranges almost every single day and remains massively volatile. Not sure how viable it is to trade in it right now. Copper, crude oil, and natural gas also ended the week in the red, with natural gas down 21.5% and crude oil lower by 4%. Now let's summarize all of this. It was a high volatility, event-driven week with expanded ranges across all indices due to the budget and the US-India trade deal announcement. Nifty and Sensex ended the week higher, but both formed wide-range candles with long wicks, highlighting sharp two-way moves and indecision. BANKNIFTY outperformed relatively and closed at an all-time high on a weekly basis, though it failed to hold higher levels post the gap up. Daily and hourly price action across indices remained difficult to read, making it a challenging week for short-term trend followers. Ranges stayed elevated while expiry sessions were volatile but rewarding for intraday option sellers. India VIX cooled off sharply post-budget despite the large price moves, indicating volatility compression at higher levels. Overall, the week was defined by big gaps, wide ranges, and fast reversals. This is a reminder that risk management mattered more than direction. Moving on to what caught our attention this week. We have 3 articles for you this week. One is a Bloomberg HT article titled "The BTS Action That Led to India-US Trade Deal." Some interesting background stuff in there about how the trade deal happened. Next up, there is this news article about Blackstone getting an RBI approval for a 9.99% stake in Federal Bank. The article notes that Blackstone's move also follows reports that the center is weighing a proposal to permit foreign investors to hold up to 49% stake in state-run banks. At present, foreign ownership in public sector banks is limited to 20% compared to a 74% in private banks and 100% in foreign direct investments in domestic insurers. That's good news actually. And maybe the reason for the resilience in the banking indexes? I don't know. Lastly, a timely article about winning and losing by Ian Castle, someone we follow keenly. In the article, he talks about 3 investor archetypes: the rabbit, the assassin, and the hunter. At the moment, while we would like to be assassins, the markets are literally assassinating us. As always, all links are in the video description. Now over to what to expect in the upcoming week. Next week is a 5-day trading week and there are no events lined up during the week. Talking about the markets, it looks like both equities and commodities will consolidate for a while before picking up the direction again. So as long as one can survive this period, you're good. And with that, we wrap up this week's weekly market metrics. If you find this series useful, don't forget to subscribe the channel. Until then, stay curious, stay steady, and enjoy your weekend.